Hello and welcome to the Investing Iguana. We have some breaking financial news for you today, especially if you follow the luxury retail sector here in Singapore. The Hourglass Group has just announced its full year earnings, and while revenue is up, profits have taken a hit. For the full year ending March 31st, 2025, the Hourglass saw its earnings drop by 13% year on year, coming in at $135.8 million. This happened even though their full year revenue actually grew by 3% to over $1.16 billion. Looking at the second half of the financial year, earnings were down 6% to $74.4 million, despite a healthier 9% revenue jump in that same period. So what's causing this squeeze on profits when sales are still growing? The group points to a couple of key factors familiar to many businesses and consumers in Singapore. Increased operating expenses. These are being driven by inflationary pressures, pushing up costs like rents for their boutiques and wages for their staff. On top of that, a fair value adjustment on their investment properties also contributed to the decline. In fact, profit after tax fell by 14%. For Singaporean investors, one direct impact is the dividend. The board has recommended a final dividend of 4 cents per share for the financial year 2025. This is lower than the 6 cents per share paid out in the previous year. This reflects the tighter profit margins the company is experiencing.
The group managing director, Michael Tay, acknowledged the tough environment, stating the past year tested the resilience of the luxury watch retail sector. He highlighted intensified competition and those rising operational costs due to inflation. Think about it. When your rent and salary costs go up, but you're fighting harder for every customer dollar, something has to give. And in this case, it's the bottom line. The company also faced higher selling and promotion costs, increased depreciation, and larger foreign exchange losses.
Looking ahead, the Hourglass says it is positioned to maintain profitability in the next financial year. However, they also caution that the luxury watch industry will likely continue to face cautious consumer sentiment. This is tied to broader macroeconomic uncertainty, and they expect market consolidation to persist. For Singaporeans, this means watching how luxury spending holds up as economic conditions evolve. The company's shares closed flat at $1.61 on May 23rd following the news. So, the key takeaway is to watch for ongoing inflationary impacts and consumer confidence, not just for the Hourglass, but for the wider luxury retail market in Singapore.